I think I don't only look at the project, I look at the individual. I'm a man of finance. I can look into balance sheets and I can easily say whether the business is successful, how long would it take the business to survive or die. That's my core competency. But basically, I value on the IC, which is the integrity, the ethics, and the character of a person. You will see I'm into EV, I'm into real estate, I'm into manufacturing, I'm into cryptos, I'm into forex, I'm into gold. The people who fail are the people who know what wrong they have done in the things. Now again, if they have the right integrity, ethics, and character, everybody fails in business. And that's how you take your risk and reward, right? I've invested into companies which are basically traditional businesses where I know that the product is going to be sold, I can make money out of it. See, at the end of the day, for me, it's making money, nothing else. The confidence should not be on the valuation. The confidence should be on the profits. Most of the startups go on the valuation. Every 10 to 15 years, there is a trend. You need to understand that trend. You need to understand the product that is giving you the maximum output.
Suvas bhai, welcome to Unboxed.
Thank you.
So Unboxed is about talking to people from different walks of life about how they were able to unbox to their true potential, how they realized what they wanted to do and how they ended up doing it at a successful level, right? So thank you for taking the time out of your schedule and thank you for doing this. You are an investor, you're a venture capitalist and you're an entrepreneur. How did you get into all this?
Basically, I believe I got everything from my family background. My father was a businessman. Basically, all are from Ahmedabad. He always had this vision of cultivating about a lack of jobs. That was his vision. He never monitored himself in terms of money. He always said that my aim is to give 1 lakh people a job. And since then, that childhood that I went through with him, I've always seen him into this business environment and decision making. So that is in the blood, basically. And then, for some reason, my interest started getting into finance. I'm a man of finance. I can look into balance sheets and I can easily say whether the business is successful, how long would it take the business to survive or die. That's my core competency. And based on my expertise and my core competency, I started getting a lot of proposals from different businesses to analyze their balance sheets. And based upon that, it gave me an idea that why not I should start investing into these companies and get more free time for myself. And that's how everything started. Slowly, I think that's how everything started, with me with venture capitalist. Initially, the first project that I took up as a venture capitalist was through one of my friends. He owns a switch bike and I never met him before. So I'm a very reserved kind of a person. But my other partner, that is my other partner Anju, she's a very outgoing person. She likes meeting people. I think I am not good at identifying good people. She's very good at identifying people. I met Raj through her and we knew for a long time. And then that was my first startup project that I got into, which was an EV bike, right? And since then, I think it became a habit. So I get it proposals, I look into stuff, and that's how everything. It was just a momentum that just kept on going. And then I moved out of this whole industry, which I was before into real estate and stuff, and I completely now focus on helping businesses to grow. That's what my agenda is. So if I partner out with somebody, my agenda is that business should grow. I look into the financing of the projects. If there is anything that comes to my notice, which is beyond the ethics of business, I let my partners know, and based upon that I've been able to build my credibility and goodwill with all my partners, and that's how I've got into venture capitalist or my angel broking stuff.
So when you say you received a lot of proposals and you studied a lot of businesses, what sort of sectors or industries were they?
See, basically I get proposals from every sector. If you look at my portfolio right now on my website, you will see I'm into EV, I'm into real estate, I'm into manufacturing, I'm into cryptos, I'm into forex, I'm into gold. So I have a multiple portfolio. I think I don't only look at the project, I look at the individual. But basically I value on the IC, which is the integrity, the ethics, and the character of a person. So before I invest into anyone, I know that person for 2-3 years. I don't just invest into him. He will come to me, I'll speak to him. I try to create a relationship bond with him. And based upon my understanding and then how he runs the business, I then invest into it. Also, one of my other thing that I believe is that I invest into a lot of failure people.
Okay.
I like people who fail. The people who fail are the people who know what wrong they have done in the things. Now again, if they have the right integrity, ethics and character, everybody fails in business. And that's how you take your risk and reward, right? So if you fail in a business and you come to me and you say, listen, I was into this business, I know what I went wrong, I know what I should have done right, but I could not do it because of the lack of financing, because most of the businesses die because of financing. That is when I get into that business. Okay, you know what you're doing, you know what the failure is, you've seen the bad part of the business, so you know how important it is to survive in a business. That gives me more confidence in a person than a person who is just hyped up, who just wants to start off an idea and he just wants to get the funds. I stay away from those kind of startups. I would rather invest into a startup that has failed, right? And who knows that he's failed because of these reasons. And now he wants to get it back on track.
And then you help them turn it around.
Then I help them turn it around with my expertise and my goodwill.
But this is such a counterintuitive approach towards investing, because investing, usually people say that grab onto the opportunities that you get.
I am the opposite. If you start investing into a company, I start exiting from that company. That's what I believe. You don't want to follow the trend.
You want to create trends?
We want to create trends. We all have seen our bad days in life, in business. I have also seen a few worse years of my life. And I do believe that if a person is very thoughtful of how his failures took place and he's ready to come back, make a comeback, he can. He surely can, depending upon he keeps his integrity, ethics and trust and character.
How difficult or easy it is for you to observe a failed company? Because
it's difficult. It's really difficult.
I want to know how you help them to turn it around. Like, what are the things that you do to turn it around?
So let's say, for example, I would say this way. Let's say if a person is into a business, he comes to me, he says, I've been into manufacturing and I have the experience of this. I lost because of these reasons. This is where I did wrong. This is where I did right. Those analyses help me to first identify the person, whether he's right or wrong. Because numbers never go wrong, first of all. So if you're talking to me on numbers, on a balance sheet which is there, right? And you're trying to tell me that because of these numbers, it did not work. But if the balance sheet says otherwise, it makes it easier for me saying that I can't trust this guy because he's not opening up with me, right?
So it's about the choices they made.
Yes, it's about the choices, where they use the funds. If I see a startup or if I see a business where he's used the funds other than the business in other things, for his personal motives, for his personal gains, for his agendas, I stay away from those projects. Because I believe that those kind of startups can really hurt the investors in the long run, right? You want the money to be put where the money has to go. It cannot get exited, right? You have to develop that business first. Once you develop the business and once you come to a point of profitability, right? That is where then you can decide because my thought is like this. If an investor is investing money into my company, I'm making profits. I have a stakeholder making profits. And I'm making a good amount of reasonable profits, but I'm going and buying an expensive car. Who owns that car? Is it me? No. It's the stakeholder's money at the end of the day that helped me to buy that car, and he is a part owner of that car, right? So I stay away from where I see a big expenses coming in, unless until we are that successful that we don't know where we have to spend the money, right? But
then it's a different ballgame.
It's a different ballgame. Secondly, one more thing is that I look at how hardworking and smart working the guy is. How many hours does he put in?
So is it fair to assume that you don't invest in an idea or a product, but you invest in the entrepreneur?
Yes.
The founder?
Yes. Product is secondary for me. It's not the primary for me. If you look at my portfolio, you won't have very unique products in it. But the ones that you will have, at the end of the day, it has to make profits, right? If you don't make profits, you're just getting your expenses go high and your balance sheets are not actually getting into profits. How long would you sustain? You won't. So It's okay if you make small profits, but it has to make a profit. That's what my philosophy is. It could be 50,000, but has to make a profit.
There is this conversation around that sacrifice short-term, make short-term expenses for the long-term growth, right? If you have to spend X amount of money right now for the projection of growth, it is okay that you get the growth after 2 years or 3 years down the line. But it is important to project it in a certain way. Do you agree with this philosophy?
Again, depends upon the product, depends upon the entrepreneur, right? So let's say if I give my own example, I have the switch bike, for example, which I've invested into. It's a product which has the capacity to go on an international level, right? You promote it on an international level, you spend after it. I do get the point, right? And on the other side, the entrepreneur who runs it is also a person who makes sure that there are profits in the company. He's not just spending it because he has to spend it, right? On the other side, I have a project which is a simple PP woven bags project. It's a factory manufacturing, which is not right now on an international level. Now, do I need to spend that kind of money behind it? I don't. It's a traditional market. It's a traditional way of marketing, advertising. It's more of a word of mouth kind of a stuff. So it depends from project to project, idea to idea, entrepreneur to entrepreneur, how visionary he is. And really is that vision that he's thinking of is what that can really help him to go ahead. Depends upon product to product, as I said.
So now that you help founders and startups or companies to scale up, to turn it around, you are helping other people face challenges and resolve their difficulties, right? But I'm sure in the journey so far, you must have faced a lot of difficulties and challenges yourself. Can you talk about those challenges or what sort of difficulties you faced?
Initially, when I started off with this idea of startup investing, I used to get a lot of startups. The ideas used to be good, but I think there was a lack of commitment at some point of time. Long-term thought process is one thing that a lot of them lack, right? Investors come in, they go easy on it. I have also exited a few of my projects because of that reason. I believe once you are into a situation where you want to grow, there's a lot of sacrifices that you have to put in, right? And that is where you get an idea about that project, not just from the project, but from the person who is running it. I believe I believe if I have a project on the line, I will work for the project from 8 in the morning till night 2, right? I'll put my whole efforts after it. I'll sacrifice what I have to sacrifice for my family, okay? But for me at that point of time, it's going to be the success of the project, nothing else. Most of the startups lack that commitment, right? Once the funding comes in, the confidence comes in. I believe the confidence is not right now, the confidence should not be on the valuation. The confidence should be on the profits. Most of the startups go on the valuation. We want to just grow the valuation and exit. But then what? You are still answerable to retail investors, right? At the end of the day, if you're running a business, you're still answerable to some investors that are there. So rather, whether it is institutional investor, whether it is a retail investor, whatever the investor is who is trusted to put money into your business, you need to work that hard that he gets the return.
But why is this trend about the valuation? Why is everybody running after valuation?
I seriously don't know. Not my thought process. Initially, in the beginning, when I used to hear the words valuation, I think I believe it's somewhere which we've tried to get it from from the West. That's the US. You see, US also has good amount of good projects. There, the concept of valuation came in. Similarly, I think we tried to copy the same idea of valuation through the data, through whatever it was. But at the end of the day, as I said, I'm a man of finance. If you give me $10 on my asset side, I have $8 on my liability side, I'm making 2 rupees as a profit, I'm happy. But you give me 10 on the asset side and 20 on my liability side and I'm on 10 down, I know this business won't survive. Because losses go cumulative. Profits take time for accumulation, but losses will quickly go cumulative. Right? So I have never focused on valuation. I've always focused on profits, creating a value out of that business, and at the end of the day, make it profitable, right? And then put it on an auto mode. Right? Every 3 years, I look for a project, I invest, put it on an auto mode, put 1,000 days after it, and then it's an auto mode. But profit is important to me, not the valuation.
But is it because it's easier to ride on someone else's money?
Could be. Yes. Yes. Education. Lack of education from the investor side, which I was one of them before. You need to have a proper education about investing. What are the terms of investing? How are you expecting that company to grow with the promoters? What is the exit, if the exit is going to be done by the promoters or not? Would you allow them to take an exit or not? Would it be on a pro rata basis or not? There are thousands of things that you need to look into. But at the end of the day, everything piles up to the entrepreneur. It needs to be, I think, the integrity, the ethics, and the character of that person will define that business. Nothing else, right? So we need to have that education, at least in the business. When do you want to exit? Do you want to exit? You don't want to exit? You want to be there for long? How much do you think you want to stay there for? Right? All these questions, before we were not educated, so we just invested, but now we are. So now we look into a lot of stuff before we do that. But primary, it's the entrepreneur. But I've invested into companies which are basically traditional businesses where I know that the product is going to be sold. I can make money out of it. See, at the end of the day, for me, it's making money, nothing else.
Right.
If I don't see that I'm going to make money, I won't.
Regardless of what we are here for.
What are we here for? Right. And I believe that not only me, but the investors who are associated with me, who are a part of the project with me, they should also make the money. I think that's the fundamental that is there. So for me, if it's a product, it can be sold in the market. It needs efforts to market it. And if it can get sold, it's a good profitability. Let's do it.
What is the procedure like? Or can you talk about how the angel investing process happened for the switch?
So as I said, I knew the promoter, the owners, Raj, for about, I think 18 months to 24 months is what I knew him for. And we became casual friends by then. He's a workaholic like me. It's easy to get along with people like you. So we both are workaholic. And he had developed that concept of e-bike. At that point of time, electric was booming in the market. And I was looking for somebody into that industry. And coincidentally, I would say that I met Raj. We discussed this project for about 18 months. He brought the product to one level of, I think he brought the product to one level of riding it, right? So to see it, feel it, that gave me the confidence in Switch. Prototype. And then I went ahead with it. But my basic fundamentals, as I said, IEC, I knew the person. So I knew he won't back off on me, right? And he is really that kind of a person. So you want to look at that kind of investments.
So as we go forward in this growing economy and the growing market, and since you have invested in electronic vehicles, is it fair to assume that where you meet traditional businesses with modern technology, that's where the future is going, or that's where the profits are?
You see, businesses these days have become too competitive. And competition is something which is actually, I would say, taking away the profits, right? Everybody, once you are into something, then there are 1,000 people who get into it, and there are thousands of options, right? EV still, or any other business, because it gets too competitive, your profits margin starts shrinking, because on the other side, your expenses start going high. The major expenses, then you want to promote advertisement and stuff, that takes away a lot of your money, right? So I would say that at the end of the day, businesses for me are more into fintech I'm interested in, not into traditional more businesses. That is where fintech helps me to make more money. Because fintech projects are projects which actually give you a good return than traditional businesses or EV or anything, right? Because there's a limitation. Fintech still doesn't have a limitation. So my strategies are that I invest the money into fintech. My profits of fintechs I invest into different companies. That's how I do it. That's how I do it. Because 10, 15, 20%, 30% profit margins doesn't make any sense these days. Because business is a changing trend, right? Today you are put in an X machinery. Maybe after 5 years that machinery is not in the use. You may have to reinvest that money into the new machinery. right? So it's an ongoing process. Your money is going to be inside that whole thing all the time, regardless of whatever. Even if it's EV, tomorrow there are things in EV may change, technology may change,
Yeah.
a lot of things may come different. So that money is going to stay into it, right?
So the fixed cost is higher and the operational cost is even higher.
Even higher. And you don't know whether the product is going to survive or not.
Or not. Yeah, that is another thing.
Yeah, because at the end, the consumer is the king, right? The consumer has to accept it.
Yeah.
I, in my mind, may have different thought process for my product. My father used to tell me that we may think that the product is very good, but for a consumer, is it good or not? That is what matters. It doesn't matter to me whether what is your thought process. What mattered to him was what is the consumer's thought process. Because when you make a product, an idea, psychologically, when I meet startups, they think they have made one of the excellent ideas, right? And sometimes they're not ready to even accept some of the, I would say, issues with it or concerns with the idea. They think it's the best one. But when they fail is when they really understand, right? So it is, again, as I said, different ways of looking at things.
Your understanding of different sectors and your investments in different sectors, manufacturing, crypto, fintech, gold, can you sum it up in portfolio management approach?
So if you look at our website, which is vrplus13.com, if you go on our website, that is how the website is structured. So if you go to my website as a person who wants to invest with me, it will give you an idea that what is the thought process, what is our strategies to do it. Basically, our investment goes into a lot of fintech projects first. Out of the returns that we get from fintech projects is when we start investing into different projects, manufacturing, real estate, or stuff like that. Because I believe that is what the trend is. You see, it's more important to know what the trend is. Every 10 to 15 years, there is a trend. Okay, you need to understand that trend. You need to understand the product that is giving you the maximum output. And if you're able to get that business which is giving you the maximum money, and then that profits you're moving into normal day-to-day businesses, you're still surviving. You can't survive on one business these days. You need to have a lot of education of where you can use the funds, the source of funds, where you can use them, cumulatively make money out of it, and make sure that the profits that you're making from those amount that you're investing, you're reinvesting and still growing yourself. Right? It's very important.
Hedge your bets. In the next segment, I want to talk about from a founder's point of view. Let's say I am a founder and I am an entrepreneur, and let's say I have a startup in fintech. I would like to know how can I approach you? How can we work together? What are your suggestions and tips for things like that?